How important is Fibonacci to an Elliott wave analyst? How important is Fibonacci to an Elliott wave analyst? We are on a monthly chart of Wasco Incorporation. The epic is WSO, Whiskey Sierra Oscar. And we want to discuss how important is Fibonacci to an Elliott wave analyst. The subject that we are discussing today is a very important subject. It's an essential topic for an Elliott wave trader, an Elliott wave beginner. All right, and I recommend to traders to watch the full length of this video so they may become a better Elliott wave analyst. Let's get started. First thing first that I want to clarify with traders, that the Elliott wave cycle is formed of the trending phase and a correction. The multi-wave and a corrective phase will form the Elliott wave cycle. So looking at my drawing on the chart here, okay, I'll pay attention carefully, okay. So this is an Elliott wave cycle between these two vertical lines, a trending phase and a corrective phase. All right, after an Elliott wave cycle, if we do not have a complex correction, we may have a new cycle. And that cycle will also be a trending phase and a correction. A trending phase and a correction. If we do not have a complex correction that is prolonged for a long time, we may have another cycle again formed of what? A trending phase and a correction. All right? This is what's going on in the financial market. You see a stock goes up, pull back, goes up, pull back. So trending phase, correction. Financial instrument trending up, and then a correction. So if you look on this chart, the chart of Wasco, is that correct? Wasco Incorporation. All right. We see that this stock, you can see, if we zoom into this, there's a little bit trending phase here. All right. Pay attention to my drawing on the chart. And then we have what? A correction. Okay. Now we have again a trending phase. Okay. And then we have again a correction. All right. Then we have now again a trending phase. All right. And a correction will happen at all costs. So do not blame the bearish traders. Price goes up, there will be a pullback. It's normal. So there will be some year when people will be talking about bearish season, why people in the name of God should sell, because stock goes up and stock will come down at one point. Okay. So this is very important for an Elliott wave analyst to understand that price goes up, trending first, a correction, trending first, correction, trending first, a correction. Another thing, so you get that message, because I'm not going to repeat that again. I'm moving on. Sometime, my friend, stock will begin a cycle. So we have the first cycle, which be the first cycle. So the Elliott wave principle stated that, okay, the third Elliott wave is usually the longest. But talking about the Elliott wave cycle, sometimes you will see that you have one cycle like this, okay? And then the following cycle may be a little bit bigger, okay? And then the third cycle will be small or equal to the first cycle. Did you get it? All right, suppose you are looking at what's of stock, okay? So as I show you here, we have a first cycle like this. Usually, the second cycle will become a bigger cycle, or in fact, usually it's the biggest cycle. So you have a bigger cycle like this, all right, and then a correction. And then the third cycle will be almost equal to the first cycle. is down to the fact that usually we see equality. If the third Elliott wave is extended, there is a high chance we may have equality between the first Elliott wave and the fifth Elliott wave. But when we transfer that, when we convert that into cycle analysis, usually the third cycle may be almost equal to the first cycle or smaller than the first cycle. So you see here this trend in first, correction, trend in first, correction. Now we have another trend in first, and we have the biggest correction after the third trend in first. This thing, this is a powerful tool in the hand of Elliott wave analysts. Why? Why usually after the third trend in first, the correction is usually the biggest. Once again, when we are counting Elliott wave, so this cycle here, all right, is a mini cycle of a bigger cycle. All right, don't get confused. You can replay this video as many times as you like, so you may understand everything that we are discussing, because this is an educational training video. So this is the first cycle, price went up, pull back. And I'm saying to you now, okay, that this cycle here is a mini cycle in comparison to a bigger cycle that is developing. In the language of the Elliott wave analyst, we use words like a lower degree, a cycle of a lower degree, is a mini cycle of a cycle of a bigger degree or a higher time frame, okay? So this cycle, if I compare it to a bigger cycle, which is this cycle from here all the way here. So for the bigger cycle, we have 1, 2, 3, 4, 5 waves, followed by a correction, 1, 2, 3. So the bigger cycle is starting from the red vertical line and has ended at the second red vertical line, or vertical red line, whatever. So here it is. So you see now, so the bigger cycle has started here. First wave, second wave, third wave, fourth wave, fifth wave, and a correction bringing it here. This is the bigger cycle. But this cycle here, from here, up, trending fast, correction, is a mini cycle of a bigger cycle. And this cycle also here, trending fast, and the correction. So this cycle between these two vertical lines is also a mini cycle to the bigger cycle. All right? Now, the third cycle, trending fast, has a bigger correction because the third trending fast is the fifth wave of the bigger cycle. Now, the bigger correction, instead of having another Elliott wave cycle here, ending somewhere here, because this third trending fast is, okay, the fifth Elliott wave of a bigger cycle, now a bigger correction. So the correction in relation to this trending fast is also part of this, but because the bigger cycle is also ending, which means a mini cycle is ending at the same time when a bigger cycle is ending. Therefore, this correction is prolonged and we have a bigger correction. I'll leave it at this point like this, and I hope you understand that subject, because I will record another video to clarify the lower degree and the higher degree when we are talking about the Elliott wave. But the question we want to answer today is how important, all right, is a Fibonacci to an Elliott wave analyst. So you say to me, Joe, thank you so much. You are now back on track because what you were discussing before is off track. No, it is not. It will make sense to you why I go through all this blah, blah, blah about a cycle, a mini cycle, and a bigger cycle, a higher degree, and a lower degree. So what I'm going to do, I'm going to remove, my lines, my drawings, and I'm going to go back now using Fibonacci extensions. And you will understand why Fibonacci is so important to an Elliott wave analyst. And how do we handle that? Okay, so in fact, I will leave this one here. All right, I will leave it there. Probably I will use it again to explain more what I'm talking about here. Okay, so I'm going to go back now to these charts. Watsco Incorporation, APK WSO. This is a Russell 1000 components. All right, I need to go a little bit fast. So as I explained to you already, it looks to me there was a trending first in this session, followed by a correction. So now we can say that probably this is a mini cycle of a bigger cycle. Will you agree? Yes, you will. Usually, the second cycle is usually the biggest. So now we have again another trending first and a correction. Now we see that the price we see pull back here, blah, 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 blah. Where is the beginning of this trending first? I will not get into that now. Now we see again, I will say to you, we have another trending first here, and there is a high chance that we may see a correction. If that correction correspond, repeat, I say if, remember that, if that third cycle correspond to the end of a bigger cycle, if that correction will be quite big, as I show you already here. But I'm not saying that this is the end of the bigger cycle. In order to know whether this is a bigger cycle, we need to perform a thorough wave analysis going back into time to know where we are, where is the beginning of the bigger cycle, and where are we heading. But without going too far away from the main topic, which is how important is Fibonacci to an Elliott wave analyst, what we need to do, as an Elliott wave analyst, you will always use a Fibonacci extension and Fibonacci retracement. This will help you to forecast the market more accurately. So if you accept that there was a trending first, if we accept that there was a trending first here, and a new cycle is likely to begin at the end of the first cycle, if we do not have a complex correction that is prolonged, okay? So this is, it's not very clear, so I can't confirm it correctly, but if you accept that. So the first cycle has started from here. I'm going to put a line there. Let's move on very swiftly because I want to finish this topic very fast. So the low of that cycle is $1.53. The top of that cycle is $24.03. So as the first cycle is completed, and we see the price going up, okay, forming a new cycle. Where is the new cycle? Here it is, the new cycle, something like that. Went up and then pulled back, okay? Or some trader may say all the way here. That's fine. Okay? As the new cycle is starting, we'll use Fibonacci extensions. What are we looking for? So we apply Fibonacci extension to the first cycle. Because you are an Elliott wave analyst, what are the key levels that you are watching? The first thing that will go through your mind is that for the second cycle to remain truly bullish, the price must come near the level of a 214 Fibonacci extension level. So as an Elliott wave analyst, you have that line on your chart. I'm going to color it now into pink. Here it is. Why 214? Because we don't have 200% Fibonacci extension level, but we have 214% Fibonacci extension level. We are using Fibonacci extension level. We will highlight the 214% Fibonacci extension level. The idea is that the second wave should at least, the second cycle, the second Elliott wave cycle, should achieve at least the same magnitude like the first cycle. What is the magnitude of the first cycle? From here down here. That's how far the price went up. From $1.53 to $24. That's the magnitude. As the second cycle is beginning, all right, it must come near the level of a 214% Fibonacci extension level and even exceed it. So if it exceeds that 214% level, it means that the second cycle is being extended, is getting bigger than the first cycle. But then, how far can that second cycle can go? That second cycle can go up to 314% Fibonacci extension level. So as an Elliott wave analyst, the Fibonacci extension level will allow you to have a bit of idea where are the key levels, the price level that the investor must know. And you will tell the investors that this new cycle has a chance to achieve the minimum of $49.61, and in a normal condition, in a strong bullish environment, may go as far as $72. If you did that, you will have forecast carefully and accurately the second cycle, which has ended exactly at 314% Fibonacci extension level. Can you see? 314% Fibonacci extension level of the first cycle on the dot. And everybody will call you an Elliott wave guru that you got it right. If you get it wrong, or the investor will run away from you and say that you are completely a useless person. But you are not. All right? So by using the Elliott wave extension level, 214, we have a bit of idea, the minimum that the second wave in normal condition, the second cycle, not wave, the second cycle should achieve, and ultimately up to this point here. It makes sense? It makes sense? There are more to this, but we cannot discuss all today. But I would just touch the most important thing that you need to be aware of if you are using, or you are an Elliott wave analyst, or you want to become an Elliott wave analyst. There are a few key levels that the Elliott wave analyst will also highlight to investors. He or she may tell them that, all right, though the second cycle is now underway, for that second cycle to continue, the price must find a support above which level? The 138.2% Fibonacci extension level, which is exactly this line here. Pay attention here, my friend. You want to trade Elliott wave like a pro? This is your chance. And I'm keeping my promise not to keep anything from you. And he or she will highlight the level of 138.2% Fibonacci extension level, if that's correct, to those investors saying, for the second cycle, it is important that second cycle find a support above the level, the price level of $32, talking about what score incorporation, a Russell 1000 a component. Because for a bullish momentum to continue, it is important for the price to break above the 138%, 138.2% Fibonacci extension level of the prior cycle, or of the prior impulsive move, all right, impulsive wave, all right, or trending fast. So here it is, you will say, all right, guys, though the new cycle has begun, I want you to be aware that when we reach this level, secure some gain or take some profit, and allow you to go above the $32. And if you find a support, buy again. And if you buy here, there is a resistance at 214% Fibonacci extension level, which is in the zone of $49.61. But this second cycle has a high chance to end. Not definitely, remember, this is not an exact sign, it's a guide that there's a high chance. If the price reaches the 314% Fibonacci extension level, Fibonacci extension level, which is corresponding to $72, it's time to bank some profit before we monitor whether it's going to go above that key level. And in that case, you can see that all the investors are all happy, clappy investors, saying that you are the Elliott wave analyst everybody should listen to. So now, but also I explained to you a minor degree and a higher degree wave count. Here we are. So we have the first cycle, here it is, between the two vertical lines. Now a new cycle is now completed here. So how can you use the Elliott wave again, the Fibonacci, to forecast, what is likely to happen in the future? So at that point in time, you go back to my drawing board, you explain to traders. So usually we have, maximum 3 mini cycle in a bigger cycle. You explain it to traders. To investors, you say, usually we have 3 mini cycle in a bigger cycle. They'll say, why? Because here it is, first wave, second wave, third wave, fourth wave, and a fifth wave, followed by what? A correction. But the correction, that correction, we have a correction of the third mini cycle plus the bigger correction. So the correction of the third cycle will end somewhere here. So trending first, correction of the third mini cycle ending here. But because a bigger correction is beginning, because a bigger cycle is completed, that correction is prolonged. All right? All right? It's like a waves of different size. All right? So now, as you can see here, you will explain to an investor in a bigger Elliott wave cycle, we have a three mini cycle. First cycle from here, ending here. The second cycle from here, ending here. Trending first, correction. Trending first, correction. First mini cycle. Trending first, correction. Second mini cycle. Trending first, and a correction. Remember, somewhere here, we have the three mini cycle and a bigger cycle. The bigger cycle is starting from here and is ending here where my cursor is. The bigger cycle starting from here and is ending here. So for the bigger cycle, we have first wave, second wave, third wave, fourth wave, fifth wave, and a correction first, 1, 2, 3, bringing it down, end of the bigger cycle. But within that bigger cycle, we have three mini cycles. So the first mini cycle is the first wave and the second wave of the bigger cycle. The second mini cycle is formed of the third wave and the fourth wave of the bigger cycle. And the third mini cycle of the bigger cycle is the fifth wave, all right? And part of the correction. But there are more to this because we know that the first wave, the third wave, and the fifth wave can be extended. But we don't want to get into that. But we leave it like this for now because we will be recording more video and you will be asking more questions and you will be posting comments. And from that, we will be answering your question by posting a more video. So that being said, my friend, now the second cycle is completed here. So what do you need to do at this point in time? So we use the magnitude of the first cycle to forecast the second cycle. What do we need to do when the third cycle has begun? We know, when I say we know, is that it means that very often, all right, very often we have observed that very often the third cycle is usually equal to the first cycle or smaller than the first cycle. But the third mini cycle can be extended. Why? Because the first, the third, and the fifth wave can be extended. Oh, it's getting too long, my friend. It's getting a bit too long. I don't know whether you want to listen to me more or whether we should stop here. I'm going to wrap it up soon, all right? All right, I'm going to wrap it up soon. So the point I want to make to you is that here we are now. How do we use, okay? Now we have used the magnitude of the first wave to forecast the second wave. Now how do we deal with the third mini cycle? Well, the third mini cycle is a bit tricky for traders to deal with if they are just using what I'm going to discuss here as a science because of the fractal pattern of the wave principle. You remember that I told you that the bigger cycle is formed of 5 waves, and those 5 waves can be subdivided into 3 mini waves. But things can become sometimes complex. Remember, complex Elliott wave, all right? I want to move on, but there are more to say. So at this stage, we can use, again, the magnitude of, I tend to put, okay, let's leave it like this for now, because that's what I'm talking about. We'll use the magnitude of the second mini cycle. So from the low of the second cycle, which is here, to the top of the second cycle. Yeah, it is. All right. And then we will apply. I'm going to remove now. Here it is. I'm trying to remove my Fibonacci extension from my chart. Here it is. So then we will measure. You see, this is the magnitude of what? The second cycle. All right. Then we will apply Fibonacci extension to the second cycle in order to forecast the third cycle. Fibonacci extension or Fibonacci retracement. Therefore, here it is. So we apply Fibonacci extension to the magnitude of the second cycle. But because this is so important, that's why I'm very careful what I'm about to say. Because we know that a bigger cycle usually, not always, will be subdivided into 3 mini cycles. But remember how we proceed when we were forecasting the second mini cycle. Usually should be bigger than the first cycle, okay? But for the third cycle, we know that it shouldn't be bigger than the second mini cycle. The third cycle usually is not bigger than a second mini cycle. So we can use the same strategy that we use to forecast the second mini cycle when we are forecasting, okay, the third mini cycle. But on the other hand, the third mini cycle can be also extended, which means it can be bigger even than the second mini cycle. But these are not a common scenario. In a rare condition, we see that. But it can happen. So therefore, that's why I'm a little bit, I don't know, I need to be careful what I'm discussing with you here, my friend. So as an Elliott wave analyst, when you are dealing with the third Elliott wave cycle, know that the third Elliott wave cycle can be extended. But also is usually the shortest mini cycle. All right? By using the Fibonacci extension of the range of the second mini cycle, we need to tell investors that the mini cycle usually is that we are now in a third mini cycle. We need to tell our investors, okay, Mr. John or Mrs. Smith, all right, we are now in a third mini cycle. We need to be a little bit careful. It may not go as far as the second mini cycle, but sometimes it can be prolonged for some time. Therefore, it's very important to check the fundamental, to perform Google Assistant, to check the global market environment before we can rush and buy as we did in the second mini cycle. And then Mr. John or Mrs. Smith will say, all right, you are the man, give me the advice, and I will follow through. Or a hedge fund manager will say to you, okay, tell us how can we handle that. So why you need to tell those investors for the third mini cycle, definitely, you will again highlight, okay, the 214% Fibonacci extension level. So you will explain to them that it is important, all right, that the third mini cycle, all right, if it's truly bullish, if it's very, very bullish, in comparison to the second mini cycle, all right, if it's very, very strong, it will reach the level of $144, which is the 214% Fibonacci extension level of the second mini cycle. So you will tell them that if you push it too far, you think that it will stop somewhere $144.44. This is why you will tell your investors. But you say to them that if it's, which is also a big challenge for this stock at this point in time, that's what you'll tell them. Now, by the way, this video is for educational purposes only. I'm not telling traders to go and sell or buy, what's called incorporation, all right? This video is for educational purposes only. So you explain to your Mr. John and Mr. Smith and say, well, let's put the $144, all right, that this is the ceiling that we are expecting for this stock for the third mini cycle, because we need to be very careful, because the correction of the third mini cycle will merge with the bigger correction. Therefore, we need to proceed with a caution, Mr. John and Mr. Smith. And you will tell Mr. John and Smith that, okay, if in the best scenario, All right. If the stock is too bullish and they are too innovative, the ceiling that you can put on it is the 261% Fibonacci extension level. The 261.8% Fibonacci extension level of the second mini cycle. And then you will explain to Mr. Smith, Mrs. Smith and Mr. John that you doubted that this time this stock will reach the 314% Fibonacci extension level. At least in the medium term and short term, you don't think that right now this stock will go to the 314% Fibonacci extension level. You doubt it. Doesn't mean that it cannot reach it, but you are very, very conservative that the first ceiling will be at 214% Fibonacci extension level, which is $144, and in the best case, the 261.8% Fibonacci extension level, the dollar level is $173.99. All right. And you will also tell Mr. John and Mrs. Smith, who are investors in the financial market, that for the third mini cycle to continue, it's very important that the price goes above the $96, which is the 138.2% Fibonacci extension level of the second mini cycle. Ladies and gentlemen, I want to stop here because this conversation is getting a little bit too big, and I will come back to it in another video when I will be clarifying more, okay, how important is Fibonacci to an Elliott wave analyst. The takeaway here is that a bigger Elliott wave cycle is usually formed of 3 mini cycles. For an Elliott wave analyst, it's very important to use Fibonacci extension to forecast the second mini cycle and the third mini cycle by highlighting the 138.2%, the 214%, and the 314% Fibonacci extension level. However, if one is using the Fibonacci extension level in the third mini cycle, one should also understand that the correction of the third mini cycle will merge with the correction of the bigger cycle. Therefore, the level that we need to watch when we are using Fibonacci is the 138.2% and the 138.2%, 214%. Those are the first key levels that we need to highlight to an investor if we are forecasting, okay, the third mini cycle. In the best case, the third mini cycle may continue up to 261%, 261.8% Fibonacci extension level of the second mini cycle. However, if the second mini cycle is not big, is not extended, there is a high chance that the third mini cycle will be extended. In that case, the stock can continue to go up beyond the 314% Fibonacci extension level of the second mini cycle. I hope you have learned something from this video also, and we put into use to make excellent wave trading analysis and also to become a better Elliott wave analyst. We are the TSTW24 traders talking about how important is Fibonacci to an Elliott wave analyst. If you have any question or suggestion, put in the comment section, and in due course we'll continue to record more video to answer your specific question. Happy trading to you all, and speak to you soon.